to Kingview Asset Management Chief Investment Officer Scott Martin on whether the president has a point. You get rid of me, you get rid of all of these gains. What do you think?
Yeah, I think the fun stops, Neil. I mean, you just look at history and look at, do you want the money in the hands of the entrepreneurs, the individuals, the corporations? Or do you want to give it to the government? And last time I checked, the government's not so good about turning profits and using money efficiently, let's say. And so the plans that the Democrats have to take more money from, let's face it, as the onion has kind of been peeled back, take money from everyone. I mean, all sorts of classes, as far as middle class, upper class, maybe even the lower class, who knows. But with respect to the Democrats' policies of taking more money from everyone and using it to what they think should be the efficiencies that are needed to make, that to me is worrisome for those who are out there in the stock market and looking at all the success the corporations are having due to the current policies.
You know, there are a lot of reads on the market. Is it getting a little too, heady here, a little nosebleedy? The fact of the matter is that the multiple on the S&P 500 trading at about 20 times earnings. That's well north of Japan, trading about 70 times earnings, or certainly what's going on in France, 16 times earnings. On different markets, different times. I know there's an ample amount of cash on the sidelines. It's gone up to close to $3 trillion now, so that's out there. Which one's out for you?
Well, look at you doing all your research, man. Those are a lot of numbers, and very important ones, though, because here's the funny part. You're right about those figures, though. The market is a little expensive, but it's not really, really expensive like we've seen in past corrections, right? In 2007, 1999, the late 80s. I mean, Neil, the market to me is fairly valued. Yes, there are some risks ahead politically, but if you look at just where interest rates are, look at how the Fed has turned tail this year and cut rates 3 times, and they're also doing, I don't care what they want to call it, it's quantitative easing. They're doing that now, billions of dollars a month. To me, that's a very safe environment, let's say, for stocks to go up in because of the fact that we have a liquidity out there. We have an expanding economy. Yes, the data isn't as great as it maybe was earlier in the year, but it's still good. And therefore, that's the information that stocks are feeding on and why I think those ratios you gave out, they were very prescient, could go higher.
All right, my friend, it's always good catching up with you. Scott Martin following these developments. The Dow about 27 points. We're also getting news out of Washington. Could be a market-moving event. You never know.